The foreign exchange market is one of the largest financial markets in the world, which allows for the exchange of one currency for another. Listed on this slide are the major economic factors which affect foreign exchange rates. In this video, I will be discussing the impact of some of these economic factors on two pairs of currencies, Australian dollars and British pounds, and Australian dollars and US dollars. The following graph, sourced from OFX, shows the exchange rate fluctuations of the Australian dollar against the British pound over the past 12 months. We can see here that the Australian dollar has mostly depreciated against the pound over this period. This graph from OFX shows the Australian dollar has appreciated slightly against the US dollar over the past 12 months. Three key economic factors will be analysed, including relative interest rates, relative inflation rates, and relative economic growth rates, to predict whether the Australian dollar is likely to appreciate or depreciate against both the British pound and US dollar over the next 3 to 6 month period. The following data from the Bank of England shows since the global financial crisis that interest rates in the United Kingdom have remained between 0.25 and 0.5%. On the other hand, data from the US Federal Reserve highlights that interest rates have been rising in the United States over the past 2 years. Interest rates in the United States currently stand at 1.75%. According to the Reserve Bank of Australia, the cash rate has remained steady at 1.5% over the past 12 months, to best support the economic goal of maintaining the inflation rate of between 2 to 3% on average. Typically, higher interest rates in Australia compared to the rest of the world encourages investors to park their money here due to a higher return on their investment. As a result of capital inflow, there is an increased demand for AUD, resulting in investors exchanging their home currency for Australian dollars and consequently resulting in an appreciation of Australian dollars against their own currency. As a result, in the short term, the AUD is likely to appreciate against the British pound, given the cash rate of 1.5% in Australia is much higher than 0.5% in the United Kingdom. The Australian dollar, however, may possibly depreciate slightly against the US dollar in the short run, given the interest rates set by the Federal Reserve are higher at 1.75% and trending upwards. This may encourage Australians to invest overseas, resulting in the sale of Australian dollars and a depreciation against the US dollar. Relative inflation rates are another economic factor which impacts on global exchange rates. If the inflation rate of Australia is lower than its trading partners, a lower comparative cost will lead to greater demand for exports, resulting in higher demand for Australian dollars and an appreciation of the Australian dollar against the trading partner's foreign currency. The following graph from the Australian Bureau of Statistics shows Australia's current inflation rate of 1.9%. Data from the Bank of England and the Bureau of Labour Statistics show the UK and USA inflation rates are much higher in comparison to Australia, at 2.7% and 2.36% respectively. In the next slide, we will see how this is likely to result in an appreciation of the Australian dollar against both currencies. Given lower inflation rates and the comparatively lower cost of goods in Australia compared to the United Kingdom and United States, there will be a greater demand for Australian exports. As a result, the graph on the left shows the demand for Australian dollars shift to the right, as trading partners require Australian dollars to purchase goods. Similarly, the supply of Australian dollars also shifts to the left, as fewer Australian dollars are exchanged for foreign currencies, given Australia's favourable inflation rate. Conversely, the graph on the right highlights the likely depreciation of the British pound and US dollar against the Australian dollar, given their higher comparative inflation rates. Demand for both the pound and US dollar will shift to the left, given both countries are comparatively more expensive, thus there is a higher demand for imports. The supply of both pounds and US dollars will also shift to the right, as both currencies will be sold in exchange for Australian dollars. According to the economic data from PwC, Australia's inflation rates are likely to surge above both the United Kingdom and United States in the medium to long term. However, over the next 3 to 6 months, it is likely that the Australian dollar will appreciate slightly against both the pound and US dollar, given its greater purchasing power in the interim. Relative economic growth rates is another key indicator of future exchange rate fluctuations. Growth rates in Australia, as can be seen on the chart, have accelerated over the past 6 months to 2.85%. This is at a far higher rate than in the UK. The effect of this can be seen in a few slides' time. Given economic growth rates in the United States, according to the US Bureau of Economic Analysis, and Australia are nearly identical, the economic factor is unlikely to have a significant impact on the future value of the Australian dollar against the US dollar over the short term. With a variance of over 1% between Australia and the United Kingdom's GDP growth rates, it is, however, difficult to determine the impact this would have on the exchange rates. One effect of a much higher GDP in Australia is that there is an increased demand for imported goods. This increases the supply of Australian dollars, due to them being sold to purchase foreign currency, shifting the supply curve out to the right. The demand curve will also shift to the right, as increased overseas borrowing to finance investments will cause an increase in demand for Australian dollars. Ultimately, while there will be an increase in the quantity of Australian dollars demanded and supplied, the net effect of this on the exchange rate is difficult to determine without access to greater economic data. Given all the economic factors assessed above, which have a large impact on the exchange rates, it is likely that the Australian dollar will appreciate against the British pound over the next 3 to 6 months. This forecast can be attributed to the following factors. Australia's interest rates are much higher than the UK, resulting in capital inflow to Australia and an increased demand for Australian dollars, and increased supply for British pounds on the open market. Relative inflation rates are far lower in Australia than the United Kingdom. As a result of the purchasing power parity, the same goods are likely to be cheaper to purchase in Australia than the United Kingdom. This will lead to increased demand for Australian dollars and an increased supply in pounds, resulting in an appreciation of Australian dollars against the pound. Relative economic growth rates are likely to affect the overall exchange rate, given the large difference between both countries. The net effect of this on the overall exchange rate, however, is difficult to determine over the short term. The Australian dollar is likely to slightly depreciate against the US dollar over the next 3 to 6 months after considering the following factors. US interest rates are slightly higher than Australia, at 1.75% compared to 1.5%. As a result, Australian investors may sell Australian dollars and purchase US dollars due to a higher return on investment. This would lead to an increase in the supply of Australian dollars and fall in demand, resulting in a depreciation of the AUD against the USD. Whilst Australia's inflation rate at 1.9% is lower than the USA at 2.36%, predictions have indicated that Australia's inflation rate is expected to rise and the US to decline over the next 6 months. This would make the overall effect on the foreign exchange rate negligible. Economic growth rates between both nations are also very similar, so this would have a minimal impact on the exchange rate over the short term. Ultimately, the main difference being the cash rate between the two nations may lead to a slight depreciation in the Australian dollar against the US dollar over the short term. However, the scale of impact will be dependent upon the expected increase in inflation rate for Australia and decrease for the United States. Thank you for watching.